Hello, hello. It's the Japan Zoomina from UC San Diego. It is April 9th, 2024. It's a beautiful sunny day in San Diego. And it is April 10th in Japan. Ohayo gozaimasu. And I hope that this day will develop into a similarly beautiful day for you all. I'm Ulrike Schede. I'm a professor and director of the Japan Forum for Innovation and Technology at UC San Diego's School of Global Policy and Strategy. Oops, there we go. GPS. GPS has at this point grown to a very proud 46 faculty. We're offering 8 degrees, in particular one that is a Master of International Affairs with a Japan specialization. If you're interested in our program offerings, please go to gps.ucsd.edu. And JFIT is our Japan Center, where we're having a lot of fun, doing a lot of different things. So if you want to learn more about our activities, please come to jfit.ucsd.edu. And you can also follow us, of course, on the various social media. Our events here at the Japan Zoomina are recorded. That has 2 implications. One, please feel free to type in any questions that you may have into the Q&A box, and I will try to weave your question into our conversation, but I'll refer to you only by your first name, and because of the recording. And on the good news side is that we have a library called the JZ Gallery, and you can find links to past events at jfit.ucsd.edu/Zoominar. Zoomina is a regular event. Of course, today we have Tim Romero, as you know, and what you're here for, so I'll introduce Tim momentarily. But please mark your calendars. We have on April 30th, Nobuyuki Oichi, who is an alum of our school and also a Nikkei journalist, and he will interview me, actually, on my new book, Shin Nihon no Kei. And after that, we have Noriyuki Shikata, who is Prime Minister Kishida's chief press secretary. And of course, Kishida is in DC tomorrow, will be today, tomorrow, I don't actually know, both days, I guess. And so Shikata-san will brief us on whatever we need to know about Kishida-san's policies. And then we'll end the quarter with Masakazu Masujima, who is a lawyer, and he's going to talk about the legal aspects of corporate reinvention, innovation, and other things like that. Okay, with that, enough of my PowerPoints. Let me introduce our speaker. We have Tim Romero in the house, and there he is. Hey, Tim, good morning in Tokyo.
Good morning, or good afternoon for where you are. Thanks for having me on. I'm really looking forward to this.
Oh, it's fantastic to have you. So let me introduce you. I mean, most of people know the house is full. Actually, we have the audience has filled every single seat. And I think a lot of the audience is from Disrupting Japan, which I will talk about in a moment. So Tim Romero is a Tokyo-based innovator, author, entrepreneur, and podcaster. He has a great about me on his website, disruptingjapan.com, where he says he's a believer in Japan and the startup community there. And Tim has his ear on the ground. He's a founder of several firms, a serial entrepreneur, something that some people claim does not exist in Japan. And he has switched sides and now partner of JERA Ventures, GRI Ventures. In the past, he's worked for Google for Startups Japan. He's advised TEPCO on its ideation and innovation programs, and including also other large companies. In Japan, he's taught at the New York University Tokyo campus, and as I just said, he's known for his podcasts, which are amazing. So please visit disruptingjapan.com. Tim, I understand from your fabulous About Tim page that you grew up in DC and attended the University of Virginia, started your first company as a 13-year-old. I tried something like that. Mine didn't work out. Then you turned into a guitar player. I went to Japan as a musician. Thank you for reminding me of Lynyrd Skynyrd. I actually had to, go to Spotify and listen a little bit. It's still good. That didn't work out, so you learned how to program and started a company called Vanguard that you sold for $1 million in 1999. So timing is just amazing. So you finally figured out the timing. And you sold it to Digital Garage, and I hope we're going to talk about DG a little bit because it's actually a really interesting place, and has really contributed to, I think, to Japan's innovation sphere a lot. So I already mentioned that you're at JERA, which has the $300 million fund. I've mentioned the podcast. I think I'm done with my introduction. Welcome, Tim.
Okay.
It's great to have you.
Well, thank you. That's it really sounds like a crazy and chaotic career when you compress it down to 60 seconds or so. But I don't know, living through it, it all seems very logical and one step always leads to the next.
Yeah. So folks, we're going to have a free-flowing conversation today. So feel free to type your questions for Tim in whenever, whatever you hear triggers something you want to know. But the first thing I want to know from Tim, so there is this continuing sort of assessment that somehow Japan's innovation ecosystem is not quite right, or behind, or slow, or different, or Japanese entrepreneurs are not quite right. And in your About page, you say you don't believe that. And I would like to hear what you'd have to say about that.
Sure. I mean, there are things, I mean, when you say things are not right, there are absolutely things that can be improved. But I think the most important thing to realize is that it's just developing differently than it is in the US. So, to give credit where it's due to the critics, there is Japanese companies today are much slower to take up new technologies, like fundamental new technologies, than their counterparts in the US or Europe. Japanese universities are still struggling to spin out technology that's developed at university. There's the ability to commercialize intellectual property. I think Japan is definitely behind and struggling. But when you look at the innovations ecosystem overall, I think there is a tremendous amount of innovation going on here, and it is being brought to market. It is being commercialized. We can dig down into individual parts of that, but it's just a really big, it's a big topic where I can't say that, okay, it's working or it's not. You've got to really dig into a specific area.
So I think the same, if I'd asked you about Silicon Valley, you would say the exact same thing, that there are parts of Silicon Valley that actually don't work.
Oh yeah, absolutely.
Really as well as advertised, right?
Yeah,
so
I mean,
each system has its advantages.
Yeah, but I mean, certainly judged on raw output. Silicon Valley, Boston, these I'd say, Tel Aviv as well, are highly functioning ecosystems. And but as you point out, there's certainly things in all of those that, okay, like this is a problem we need to fix. But I'd say looking at like the Tokyo ecosystem, it definitely is not quite on the level of a San Francisco, a Boston, or maybe even a London, but I'd say it's similar to what you experience if you go to Berlin, if you go to, say, Austin, that level. So it's functioning, it's producing really interesting innovations, but there's definitely improvements that can be made.
Yeah. So we're actually, the questions are already coming in. So let's talk money, since you're venture capitalist right now, and this is a topic, of course. So there's the two things that are often said about Japanese VC. One is that they are salaryman, or at least in the old days, it was salaryman on rotations, and so they never really developed any expertise. There's also some people point out that Japanese VC are often too friendly, that they're not, they're too kind because there's now a relationship and whatnot, and they're not these like milestone enforcers with a baseball bat that's kind of, you have to work harder. And then the third is, and that's actually Rick's question, that it's hard to attract funds because Japan has lower returns, or so it is said, has lower returns. Is that true, or is it just,
I'd say there's definitely truth in all of those. So on the lower return, let's take it in reverse order. So the lower returns, difficulty in attracting funds. Yes, I think that is, so historically, Japan's venture industry has been set up as almost the opposite of what the US is. So the US venture industry, it's famous for you know, 80% of your portfolio is going to go to zero, 20% are going to be superstars and generate these huge returns and more than make up for those losses. Japan's venture industry traditionally has been flipped, where 80% of your portfolio, you'll be able to march it towards a nice, safe, low valuation IPO. 20%, something will happen to it and the deal won't work out, but it gives you these nice, steady, predictable streams of profits. And that's how things are structured. So one of the biggest changes that we've seen over the last 10, 15 years has been that as more and more capital comes in, Japanese investors are, both the investors and the startups are looking for growth capital. So they didn't want to IPO that early because they know they can make more money, they can grow faster by expanding more when they're private. And at first, this was strongly resisted by the VC industry, just because that's not how it was done normally. That's not the strategy. This has been a big influence of foreign money that has come in and was kind of investing and picking off the very best startups. And when the Japanese VCs started losing deal flow, they changed. So they are investing in more growth opportunities. Coupled with that, the fact that they're raising larger and larger rounds means you need to make bigger investments. And that almost always means investing in later stage companies that have this higher growth potential. So I'd say it is definitely true that this persists, but it is something that's changing. The mindset among the founders. So, I mean, in fairness, Japan's a big market. You can make a lot of money never leaving Japan. But more and more founders are thinking about going global. They're looking at the global market. And the VC mindset is finally kind of catching up with that. So it is true, but we're seeing this change a bit. And I know I said I was going to do these in reverse order, but I forgot what your second and first question was. Can you remind me?
We'll come back to that. So the return. Let's come back to the returns. So let me stay with the global for a moment because you have a recent podcast where you actually raised this topic as well, right? So there's this notion about the Japanese VC don't want the startups to be global.
Well, in theory, they do. I mean, well, of course, in the abstract. But the thing is, going global, it's risky, right? It is difficult. It requires a lot of capital. It is certainly going to delay the IPO for a couple of years. And a lot can go wrong. So yeah, VCs are, to people who are not familiar with the industry, VCs are surprisingly risk averse. Yeah, they don't like to take, they really are. We like to, present this image of these crazy risk takers always on the edge. No, the industry is incredibly risk averse, or at minimum, very risk conscious. The only way you really make money is to be able to manage these risks. So a lot of VCs don't like that. It's new, it's risky, but it's starting to change because that attitude is causing the VCs to lose deal flow, and losing deal flow is about the only thing that will cause a VC to change their behavior.
But so that's always been a little bit the challenge for Japanese startups, right? The Japanese market is still big enough and adding the English language component to whatever it is that you're doing is a lot of effort.
Yeah.
And it's hard. The question is, are there any returns on that investment, right? And so would the startup, forget about the VC, the startup CEO might also say, I don't want to go global. I can make enough money here.
Some do.
Why would I bother?
But I think that more and more people are realizing now, I mean, there are some industries that it makes no sense to go global, right? They're dealing with something very specific. In the US, it might be healthcare services that only makes sense within the US structure. In Japan, there are certain business-focused enterprises that are great businesses, but just it doesn't make sense to scale internationally. But the world is a lot smaller than it used to be. And I think most founders realize that if they don't go global, the global competition is coming to Japan sooner rather than later. And there's tons and tons of VCs that are looking for companies globally to bring to Japan. And Giera Ventures is one of them. So I think the founders really understand that it's a global game now, that you have to, you won't have the Japan market to yourself. There is going to be global competition, and you need to be ready to go out and meet that competition.
That's interesting. Yeah, because also the language is no longer a problem because now we have AI translators. So
Yeah. It's like the world is
it's
getting
open.
smaller. It
Yeah.
really is.
Yeah. So the question was actually about, the second question was about money. So so one version of the story that I've heard, and I want to run it by you, and you can tear it apart, if or confirm it, is that one of the things that's still holding Japan back a little bit is that a lot of the exits are IPOs, and because there are too many IPOs, that reduces the expected returns at the time of IPO, which then and I'll come to the reason of why there are so many IPOs later, right? So which then means that the VCs cannot earn these super high returns. As you just said, it's just more like a Heijunka, right? It's a Toyota production system. So let's have an even flow, and let's have five of these succeed or something. Steady does it. And I think that's the way to go. But the question was, does that make it more difficult to put a fund together that the return, the average IRR is lower, basically?
Well, it actually makes it easier to put a fund together because the benchmark, what you're being benchmarked against is so much lower. So if you're looking for the LPs, the companies that are investing in these funds, their alternatives have been a very flat stock market, or Japan government bonds yielding 0.23%. And if you can make a 3% return, you're golden, right? You'll be able to attract money. But again, finance is also becoming much more global. And so these Japanese LPs who would normally be investing in a Japanese fund, making them 3% return, are saying, well, it's a little more risky to go with foreign VCs, but they're targeting 15% returns. And yeah, let's give that a try. So the market's being forced to change. Yeah.
Yeah, although right now the exchange rate should probably bring a lot of money into Japan rather than having it go out.
You would think it would, but it's not having as big effect as I expected it to. And I think it's just there's a lot of skepticism around how long this will persist. And it needs, like when you're investing, now, when you're buying assets, I mean, I think it's really helped like real estate markets and things like that. But in general, like when you're buying assets, you need to get the money out as well. So being able to invest when it's really cheap, and then having to buy your dollars back at a lower exchange rate is not attractive either. So it's complicated. It hasn't had the big impact I expected, quite frankly.
That's interesting. So your comment on the global triggered some questions, including one by Axel that I'm going to read. You said that investment is a global game now, but then he's inviting us to look at the startups. Few Japanese startups seem to be known outside Japan, maybe Mercari, and that's it, or something, right? Rakuten is no longer a startup, of course. But in some areas,
if you own a baseball team, you're no longer a startup.
That's exactly right. Yeah, or if you're 20 years old, or something like that, right? So there are some very promising Japanese startups, but he wonders, when will this change? When will the world know about Japanese startups?
That is a fantastic question. And I think that is a version of that question is kind of what keeps my optimism in check. Because no, it's true. Because there are, there's been really good research done saying that the Japan startups are creating value. It's just by IPOing earlier, you don't see as many unicorns. But the fact is there needs, any healthy ecosystems needs to be creating real economic value, whether it's pre-IPO, post-IPO, in the 4 or 5 years post-IPO. And right now there are very few Japanese companies that are making this impact overseas as startups. And actually, this gets back to your thesis of the niche theory. And I think that, the one of my big concerns is exactly this. It is that we don't see Japanese companies going global to dominate an industry. They're filling small niches within those industries, both the startups and the established ones. And from a business strategy point of view, it's a real question whether that's sufficient. Filling a niche in another company's supply chain is not a position of strength. No matter how important you are in that supply chain at the moment, your margins are always going to be squeezed. You're always going to be looking to be replaced by another supplier. And we don't see Japanese companies really yet dominating industries the way we saw in the 60s, 70s, 80s. And that is a cause for concern, both for players in the industry like me and for people at Medi. So that's a great question, and it is a very real concern.
So as you know, I on some advisory boards of startup places, including a biotech one and another one, and so I get to listen to pitches in Japan, and I'm always struck how little emphasis there is on show me the money.
Mm-hmm.
There's a lot of, it's a nice idea. We want to make the world a better place. It's also nice and peace and harmony and all of that. And then very little on market sizing and who is the buyer and how much will you charge and when will this, is this just my circles or is this something?
No, this is something. So I don't want to mention any names, but I've been a mentor at a particular impact accelerator for the last, 6, 7 years, for a while anyway. And every time, so they usually bring me in to talk about pricing strategy. And because, I don't know, it's hard to find people to talk about that, I guess. And it's so frustrating for me because these tend to be university students, people in their 20s, and they've been given so much validation. They've been told like, oh, you're saving the world and you're following your dreams. And isn't this wonderful? And it is wonderful. And then I have to go in there and say, okay, well, that's great, but who's going to buy this? And no, unfortunately, people don't buy things because it's the right thing to do. They very rarely will pay a little bit more money because it's the right things to do. So let's break this down. Let's see what we can do. People say it's great, but have they said they're going to buy it? And at the end of the end of the accelerator, all the mentors get feedback, and mine are always split, like radically split. It's like people are either like, this mentor didn't care about my startup at all, or this was the best 45 minutes of the entire program.
Right, exactly. They either get it or they don't, but you basically know at that point, right? They either
I think it depends. So if you're working more with social impact startups, I think it's a real problem. I don't think we're helping those entrepreneurs by telling them how wonderful they are and shielding them from the realities. I mean, we don't need to go full Glengarry, Glen Ross on them. But on the other hand, I think if you look at other industries, founders tend to be a lot more pragmatic. If you're looking at a lot of like B2B SaaS, if you're looking at startups that are founded by maybe founders that are a little older, late 20s, early 30s, or even up into their 50s, they're bringing kind of a business sensibility to it. So I think it really depends who you talk with. Yeah. And I don't work much with US college students, but I'm wondering to what extent that would be true in the US as well. So it's definitely true, but I don't think it's across the board.
So, well, first of all, little side note here, there's this image of the Silicon Valley kid, right, that drops out of college and starts a company. That there's this 1 in a million. The average age of the Silicon Valley startup guy, dude, so mostly men, right, is 45.
Yeah. That makes sense to me.
They work at Apple or Google or something. They make mistakes on somebody else's
Yes.
account, and then they, okay, now I got it. And that also is true in Japan, right? The people that do this dassara, right? The dictionary definition of dassara is to extract oneself from the existence of a salaryman. Right. So they quit, they start a company, but they're usually in their 40s or 50s, and they're the good ones. But I think the VC are not tough enough in Japan also. I mean, that there is this, as you just said, right? We congratulate them and say, oh, this is lovely, and and keep going. And then I also think the universities don't teach finance in the same way.
Yeah, I think the VCs not being tough enough are it's true. I think, well, they're tough in the wrong way. They're very demanding in terms of reporting, and they'll want to see week or monthly financials and ridiculous distractions. But I think one of the core problems is Japanese VCs are dominated by, really smart finance guys, and they're guys. It's mostly men. There's only a very small handful of us that have startup experience, and actually it's a small handful that even have operational experience. Most of them come from finance. And on the corporate VC side, the CVC side, as you mentioned, a lot of them are just rotating through. They'll be in the CVC unit for 3 years, 4 years, and rotate out. And they're in with a regular VC, your salary, your compensation depends on how much return you're generating. And in the CVC world, well, in the Japanese CVC world, that's very, very rarely the case.
No, so your salary depends on how few your losses are, right?
Well,
you want to mess up.
Actually, I think some companies are surprisingly uncaring about that. So I do think that the Japanese VCs, it can come across as being too friendly, but I think they're not adding nearly the kind of value that they need to. There is a discipline in running a company, both financial and operational, that new founders don't know and really would benefit from. But again, since most VCs here don't have that background of operations and startups, they can't contribute that way, and it's a shame. And I don't think either side is well served by.
Yeah, and I've heard the same from the private equity guys, right? So it's very difficult to find CEOs to bring in. But you mentioned a word that a lot of people have questions about. So let's go to the large companies. So often overlooked, super critical part of any innovation ecosystem is, of course, the M&A route as an exit. And so in Silicon Valley, some 80% of startup exits, as you know, are through M&A, just selling it to a large company, right? And for those of you who find that surprising, let me just give you one number. Google, in its 20-year existence, 25-year existence, has made 250 acquisitions, right? And there's actually a website called killedbygoogle.com, which is sort of a graveyard of some of these. And it's not entirely clear to me whether these were killed by accident or incompetence or on purpose to squash a competitor or something, right? So there's all kinds of stuff going on. But large companies in Silicon Valley are a huge part of the innovation ecosystem. And so in Japan too, large companies are waking up to this call, but they seem to play a slightly different role. So the first question is actually from David, who would like to know what the private sector, the large companies are doing in terms of pushing technological innovation in startups, and is it enough?
Okay, so I think there's two parts of that. One's the M&A specifically. and the other is kind of innovation more broadly. So M&A in Japan it's fascinating. So traditionally, M&A in Japan has always been distressed assets, where you can pick up customers or assets at a fire sale prices. Someone's going out of business. But strategic M&A has not really been common in Japan, where you decide, okay, we need to get into this business, so we're going to examine the top 3 companies in the space, and we're going to acquire one of them in 9 months. That whole way of thinking is new inside Japan. Now, interestingly, Japanese firms tend to be very acquisitive outside of Japan. Internationally, they buy a lot of companies. Domestically, it's only been very recent. There are some companies that do it well. KDDI comes to mind. But I think the biggest impediment now is not cultural. I think the people I speak to are comfortable with strategic M&A. They've got M&A departments that are set up for it. But the way M&A is taxed in Japan, again, I don't mean to get too wonky here, but goodwill can stay on the books in America and Europe, I mean, basically forever. But in Japan, that has to be written off over, I think it's 4 years. So effectively, if you're buying a startup, they don't really have assets per se. So what you're buying is this big ball of what in accounting terms is goodwill. So in Japan, a company buying a domestic company needs to pay the cash for the company. And then over the next 4 years, they need to basically, in accounting terms, pay that again. So this keeps valuations low because the firms just can't afford to bid up those companies, and it makes exits harder. And there are, like, Japan Venture Capital Association is lobbying pretty hard to get this changed. A few others are as well. But at this point, I'm convinced that it's not cultural anymore. It's not a question of awareness. CFOs almost all have an M&A department reporting to them now. I think it really is purely structural. Why? And I think that will get changed, soon, as defined by Japanese political standards.
So that is yeah, but that's a huge shift from, if we think back 20, 30 years ago when you started out playing in this world, right? There was this story which sounded true to me at the time, that the big guys were basically trying to keep the little guys little, and that there was very little antitrust protection. And if you had a great idea in your garage and you made a new whatever gadget, then some Sumitomo
big company would just take it. Yeah, absolutely.
Copy it, and you had no recourse, right?
Basically, and that gets back to like the second half of the question about the role that these companies are playing in the innovation ecosystem as a whole. And exactly to what you were saying, one of the biggest changes is my first company, Vanguard, I started in the .com era. And at that point, it was almost impossible to do business with a major Japanese company. You would be pushed down through 3 or 4 levels of subcontractors. And you can't do anything innovative that way. And furthermore, Japanese companies, a little bit now, but much more so back then, there was lifetime employment. You didn't fire anyone. A lot of what the company was focused on is like, what are we going to do with these people? What can we have them do? Not how well can they do it. So when they saw a new idea, they're like, oh, do we have people we can put on that? Can this keep some of our people busy? That dynamic is pretty much gone. Every major company, well, certainly almost every major company in Japan has a team of people who's tasked with seeking startups to work with. Japanese firms view startups as a way to address new markets, as a supplement to their R&D departments. And they view business relationships much less transactionally than U.S. enterprise does. So there's much less adversarial relationship between Japanese startups and Japanese enterprise than there is between U.S. startups and U.S. enterprise. And part of that is just US startups are much, much better funded, so they can go toe to toe with the enterprise companies more. But part of it is just that business is less transactional in Japan. So it is possible for enterprises to actually advise and support and help startups bring their products to market.
And that's happening now more.
Oh, absolutely.
Yeah.
Absolutely.
That's what I'm thinking. So Carl has a question where I actually want to throw in some data points that I once found, and I want you to tell us whether directionally this is wrong or right, or did I get it right? So Carl's question is about the focus of these VC or CVC. Are they mostly in Silicon global, or are they as busy in Japan as they are in Silicon Valley? And I actually did a data study, took a snapshot in the mid-2010s, and we basically counted Japanese startups and CVC investments in Silicon Valley, and we found that there was like an enormous amount of activity in Silicon Valley, and that basically everybody in Japan, every large company that wants to look global in Japan has a sort of a Silicon Valley office. But then we looked at Japanese data, and we found that there was a tremendous activity within Japan as well in terms of M&A and in investments by CVC. So what do you think? What's the balance here? So how much of the CVC activity is global, and how much of the CVC activity is actually in Japan?
Well, there's an organization called Global Corporate Venturing, and they do a global survey every year. And of the Japanese firms that were members, about half of them were global CVCs and about half were Japan-only funds. So that's probably the best data I've seen on it.
Mm-hmm.
And it's not necessarily size either. There are some funds that are quite big that are only Japan focused. And there are some very tiny $20 million funds that have offices in Silicon Valley. So it looks like about 50-50.
That's what I walked away with. And it's much higher in Japan than we pay attention more to the Silicon Valley stories.
Well, yeah, right. Those are the ones that just hit our consciousness. Even me here in Japan, just because, it's much easier for me to read news in English than it is for me to read it in Japanese. So I tend to get most of my news in English. So yeah, I hear about those startups, those VCs more.
So Ben is asking a question that you already started going down that road, but Ben's interested in which major Japanese companies do you see as most progressive, aggressive in regard to CVC? And you mentioned KDDI, which is of course out there. That might be the Sogo Shosha, which have big
KDDI
funds.
is really good. Sony Ventures is a really impressive CVC, but sometimes it happens in surprising places. Japan Post is a fascinating example of a really innovative CVC inside a very traditional. My goodness.
And of course,
gracious,
insurance companies. We had Albert Chu here last time, right? The insurance companies are amazing. NTT.
Persona, Recruit Persona has got some interesting CVC activity. Even Tokyo Gas, they're in our industry. They're doing interesting things as well. The Shosha, of course, Mitsubishi Mitsui, although they tend to have like lots of CVCs. Every like division seems to have their own. Mm-hmm. So if you're dealing with a Mitsui CVC, you might be dealing with a totally different organization than your colleague who's also dealing with a Mitsui CVC.
So with all that, Jordan is wondering whether you think that the CVC is actually outsized in Japan relative to private funds, or does CVC's heavy role in Japan venture investments depress returns by reducing exit opportunities?
No. I think they are. They represent a much larger percentage of venture investment in Japan than they do in the US, but I don't think it's outsized. I think that the role that enterprise plays in bringing startups to market here is bigger. So I think it's natural that the CVCs, I think it's appropriately sized for the influence that venture has in Japan. In terms of depressing returns, I don't think so. I don't think at all. I don't think that has an impact. I think that Maybe around the year 2000, a lot of CVCs would invest and say, okay, now you can't work with our competitors. But I haven't seen I haven't seen serious people try to do that for many years. So I think most CVCs and most founders understand the game that, look, you're an investor, they can go elsewhere. So no, I don't think it depresses returns. If anything, it's one of the driving forces of getting M&A interest in the corporates is the activities of the CVCs. So I think it's only a positive.
So let me go back to David's question, because there was also something about the government in there. And we know from history that Silicon Valley is basically a product of the US government wanting to go to the moon and said, hey, anybody interested in developing some semiconductors, here's some money. And I've had some conversations in Japan about this, because there seems to be a lot of possibilities, correct me if this is wrong, for startups to get money. Often the amounts are a little bit too small, so they spend a lot of time chasing. But even if you didn't get a VC fund, you could go to the government. There's a government fund, there's a grant program, there's all kinds of pots of money. And I'm thinking that maybe a bigger problem for startups is still to sell stuff, to
Absolutely.
find clients. And would it maybe be better for the government to start buying stuff from startups rather than giving startups venture?
Oh, yes. Oh, yes. I think this is something that consistently startup founders are telling me, yeah, the grant money's fantastic. We really appreciate it, but let's work on procurement. And it's a tough nut to crack. It really is. I think it's one of those things, like there's general agreement in the abstract that it needs to happen and it needs to change. But once you start talking about, well, let's open up this specific thing, then all the vested interest and lobbyists say, no, let's not open this specific thing. Let's find something else. So, I mean, one example, there's a lot of very interesting space technology, a lot of aerospace startups in Japan. And this was a huge frustration of them. And every founder I talked to would tell me, at least off the record, maybe they wouldn't let me put it on the podcast, that yeah, we love grants, but let us at least bid on some of these projects. Let us in the door. And what really changed, NASA's Artemis project was run in such a way that it is wide open. And Japanese to global startups, not just US. And so Japanese startups started successfully bidding and participating in Artemis. And JAXA finally came around and said, we could do that. And they've just started cracking open the door to allow Japanese startups to participate. But I think another interesting in terms of the government function, I think that it's not just the moonshot, it's not just the space program. So much of Silicon Valley has been built on US government money, defense, DARPA money in particular, and loan guarantees. But there's this weird cultural thing we have in the US where the government needs to stand in the background. And the founder can take millions and tens of millions of dollars in government guarantees and contracts, but he has to stand back and say, well, the government needs to take a step back and let us independent, market-driven entrepreneurs lead here. And that's just the culture we have in the US. In Japan, I think the government needs to be more out in front. It needs to be out there waving the flag to kind of legitimize the concept. And I think so the Kishida administration has been fantastic in their support of startup programs and startup innovation and slowly cracking that door open for procurement. I wish he'd crack it open a little quicker. Prime Minister Abe was the one that really started the ball rolling, though. And for all the programs that he announced, that he launched, simplifying incorporation, and I mean, a lot of really good stuff. But I think the single most important thing he did is he got on TV and said, startups are the future of Japan.
Yeah.
Startup innovation is what's going to drive Japanese innovation in the future. And the next morning, every CEO in Japan was what are these startup things and why aren't we working with them?
So, so the imprimatur, right? Society has to wrap its head around the idea that the salaryman is no longer the only career track, right? And
Yeah.
there's this famous story about Mikitani-san's mother-in-law, because Mikitani-san, of course, was initially an IBJ banker, and then he married as an IBJ, and then when he decided to start Rakuten, he at least claims, it's a funny story, true or not, that his biggest problem was the mother-in-law, who did not like that. So Oliver has a marginally cynical question on what you just said about the Prime Minister Kishida, but it's a worthwhile question, which is that what's new? Does it matter? I mean, we have seen 20 years of government push for startups, right? Is the new program the same of the old, or is there something really changing about what the government is doing?
I mean, yeah, it is. I think so. The key to understanding it is the signaling is far more important than most of the specific programs. And I've got a pretty cynical take on it too. Like most of these the big programs, that money never ends up at the startups. It really doesn't. It gets, but the legitimizing effect in Japan, the need for startup legitimization is much stronger than it is in the US. So when governments sponsor like the Sushi Tech event, these huge events where you've got
that's, by the way, the city of
leadership.
Tokyo, not the government.
Well, no, but I mean, it's every level of government support. So there is the national support. METI has had parts of it that have been fanatical startup supporters since the early, since the .com, but I've been working with them since the early 2000s. But they're finally getting their divisions expanded. They're finally running these programs. They finally have the ear of ministers, and we've got a new minister for startups. Now, some of the programs they're running, you can ask, and many people do, whether this is the best use of tax money. But I think that the signaling aspect is incredibly important. And without that, we would not see the changes we have over the last 10, 15 years. So I think you need to look at different parts of government involvement in the US and Japan, where in the US, it's just the money funnel and stay in the background. And in Japan, it's almost the opposite. They need to run out in front. And I think a program like DARPA in Japan should not be defense focused, but where you have a problem defined and say, okay, now anyone can participate, whether it's NEC or, two people in a garage somewhere.
Right.
I think that would be a huge boost for startups.
So this is actually the perfect segue to Hiro's question, which is an excellent question. That there's this whole talk about open innovation, which of course doesn't mean what the initial concept was, but it means that large companies get their act together to open up their R&D departments to outside ideas. And so the question is, this collaboration between corporations and startups, will that lead to M&A or just partnerships, or is it just hot air? I mean, is this whole open innovation, is that a dance of, innovation cosplay of sorts?
Innovation cosplay, I like that. Yeah, sometimes it is. I think that, so some companies have a toe in the water, and like the CEO decided he wanted to do open innovation and they're not really behind it. Yeah, some companies are like that. But I think the industry as a whole is definitely moving forward with it. The corporate venturing is often the tip of the spear there, where they're out investing and bringing these startups back into the company. So I'd say that most of the major companies are very serious about it. They're not particularly good at it yet, but they're serious about doing it.
I think that's fair. So it's more than just hot air. It's just done a little bit differently. And Ben has a question to this point, which which is very interesting. That is it true? So there's all of this research showing that Japanese companies are fairly slow when it comes to M&A, and sometimes their due diligence just takes twice as long, and then oops, oh, it's gone. Oh, too bad. Do Japanese VCs and CVCs move more slowly and cautiously than their foreign counterparts, or is that just
No, guilty as charged. Yeah, we do. Uh, I'm
and
not,
is
I'm
that
not
a
even
good
gonna
thing or
argue that.
bad? I mean,
We frankly, we do.
it could be a good
Jira
thing, right? So
Ventures, I had a meeting with my managing partner yesterday saying, look, we got to speed this process up and let's streamline it. And if we're going to play globally, we need, no, guilty as charged. We are slow.
So I actually think it would be a terrific academic study if it were possible to do, is to look at all of the M&A deals that Japan was too slow, or venture deals for that matter, that then turn out into big losses. So how much money has Japan saved by being, slow and careful? And when is slow too slow, right? So it's a complicated question. I don't know. The United States certainly has, U.S. companies have lost a lot of money buying bad things, right? So,
well, no, I mean, certainly the pendulum could swing the other way. I mean, I think we've seen, we're seeing it now, in Silicon Valley with the AI boom, where you're seeing these VCs like, oh, well, we're putting in, we're raising $100 million pre-seed round for 2 Google interns that are starting an AI program, and you got to be in the next 2 weeks or you'll lose it. Like, yeah, fine, I'm happy to lose that. So I do think that Japanese VCs, CVCs in particular, need to move faster. I've got no data on like the economic impact, but I just know strategically, as an industry, we need to move quicker.
So I'm looking at the clock and I'm kind of thinking, I could go on for hours, but I like to end on a somewhat happier note. We've been kind of been a little bit down and harsh on the Japanese innovation system so far, but James has a question, and he asked this earlier on, but I've been holding off on it because I think it's a fabulous question for us to kind of see whether we can wrap this up in a kind of forward-looking way. And that is, the question is, a healthy ecosystem needs a critical mass of talent, capital, and experience. And so in Silicon Valley, for instance, there's a lot of these magnets that then bring the money, and then you get a critical mass, and then that feeds some other, and so on and so on. And I don't see this happening in Japan. I'm reading the question. I am seeing it happening in Japan, by the way. But so the question is, why, if that's true, is it happening in Japan? Is there something about the culture or the structure or something in Japan that there's still not this critical mass, or what the Japanese actually call the metabolism, right? Sort of the churning of the money, and people come, people go, there's more, money comes in, money flows out. That's all more like, again, steady does it, Heijunka, right? And so what are you seeing on the ground? From the outside, from where I'm sitting, Japanese innovation ecosystem has grown in leaps and bounds over the last 20 years. Compared to what it was 20 years ago, it's a whole different entity now, right? That doesn't mean it's there, but so what do you think?
No, I think whether we're calling it a critical mass or a metabolism or an ecosystem or whatever biological or chemical metaphor we choose to use, it is happening. I think that, so my measure for like an ecosystem existing or not. So in the .com era, there was no ecosystem. There were founders. We sort of knew each other. There were events, but there was no ecosystem. Now we're seeing like startups are doing business with each other. There is employees that will work from one startup and then go to work for another, and founders will, their startup will blow up. They'll go work for someone else. There's labor mobility within the startup ecosystem. There is economic activity that exists within the startup ecosystem. There are startups that exist to service other startups. So this is an ecosystem. This is something that is sustainable and that can survive economic upturns and downturns. And it's not simply the size. I think it's good to remember that, for example, Silicon Valley, when it started, it was the suburbs of a city that wasn't even a top 10 US city. It was far, far away from political power and financial power. And maybe you need that to be really innovative, but it doesn't have to be big to start. And I think if you look, I've always had a soft innovation spot for Fukuoka in Japan, because
Yes.
it is small, but it is a genuine founder-led ecosystem. And so it's not just size. So I think Tokyo definitely has that real genuine dynamic ecosystem now, and it wasn't there 15 years ago. So I think it's growing. It exists. It has survived ups and downs already. So I am incredibly optimistic about it.
Well, you'd better be. You have your skin in the game. So
I do.
yeah, but so the Fukuoka thing is definitely true, right? And that it's a little bit off the government's radar might actually be helpful. And there's a lot of economic activity, of course, there that creates a demand. So interesting developments. I think we have to watch this for years to come. We will also now, of course, follow your venture capital firm and see what you're doing in terms of helping Japan. So
and please please check out Disrupting Japan.
absolutely. I was just going to go there. So everybody, Tim Romero has his own podcast, which is excellent. And you'd be amiss if you don't go and check it out. So by all means, disruptingjapan.com, right? And Tim, thank you very much for joining me today. And we will gather again in 2 weeks' time here. And on the hot seat is actually is going to be me. I will be interviewed about my new book. So I'm not sure I'm looking forward to the next one as much as I look forward to this one. So Tim, thank you very much for joining us today, and everybody stay well, stay healthy, enjoy the day, and I'll see you in 2 weeks. Thank you very much.